Good afternoon, and welcome to NAFA's Member Spotlight. This series was designed to introduce you to our premier partners that provide good and service that enhance your daily business operations. I'm Chuck DiVencenzo, President and CEO of NAFA. Today is my pleasure to give you an opportunity to get to know Maureen James and Roger Hayashi of Summit Compliance. Maureen and Roger, welcome. Our guests may recognize you. Oh, sorry about that. Our guests may recognize you from a recent education series presentation, but today we would like to focus a bit more on Summit Compliance and the services you offer. Can you tell us a little bit about what you do and how your current business was established?
Sure, absolutely. Thanks, Chuck. This is Maureen, obviously. Roger and I are the co-owners of Summit Compliance Group. We're a full-service compliance service firm focusing primarily on distribution, so insurance agents, securities reps, investment advisors, as well as IMOs and BGAs, and even some insurance carriers. We both spent about 25 years working in various compliance roles at large firms, including insurance companies, broker-dealers, RIAs. And during that time, we realized that there really are little to no resources for independent producers or firms to help them, both understand and manage their compliance risks. Obviously, new producers get a lot of training and a lot of coaching on products and sales strategies and building their business and marketing themselves. But it's our experience they get very little information on what the regulations are that apply to them, what they really mean, and how to really meet those on a day-to-day basis. So we saw too many producers, get in hot water with regulators or carriers because they just didn't realize what some of those rules are. Basically, they didn't know what they didn't know. So our mission at Summit here is to educate our clients on what the rules are and what they really mean to them, and how to build that compliance into your business instead of as a sort of an afterthought or a series of check boxes, sometimes that are done a little too late. Our goal is to make sure that your sales don't go down either. We offer practical solutions can be adopted and adapted to fit your unique needs. So we don't apply a cookie cutter approach to compliance, and we treat our clients, unlike a square peg trying to fit in a round hole. There's a lot of nuances to the rules and regulations. So in most cases, the compliance approach is going to be nuanced too, and it's going to be tailored to the business. So some of the key things we offer to help with this, they include advertising compliance. That's definitely a big one. Compliance training and coaching, consulting, sometimes just answering just random questions on, hey, I have this situation, how do I deal with it? Is this a problem? Can I do this or do that? We do have an RIA, investment advisory compliance arm of the business. So we do registration and filing for new firms, ongoing renewals. We'll help you set up your compliance platform and your program and offer ongoing support as well. And then obviously the, basic risk assessments, audits. We offer assistance with cybersecurity and really anything that you need to run your business from a regulatory compliance perspective. Chances are we offer it or have offered it. So kind of your one-stop shop for all your compliance needs. That's it kind of in a nutshell. Did I miss anything, Roger?
Go ahead, Roger.
Nope.
Yeah, that is a very diverse and it obviously what happens in compliance just touches everything that we do, and it's so important for our firms and both on the carrier side and the IMO side that we stay in compliance and work through the process. It really becomes a business advantage a lot of times for folks. A lot of folks understood that you were going to be on today. They submitted a few topics that they wanted to hear about. I received a few questions about NAIC's best interest model regulation. Can you give us an overview of this and what it might mean for distribution as states adopt it?
Sure. Yeah, this is Roger. I can give you kind of a quick overview of this new model regulation. The name is the Suitability and Annuity Transactions Model Regulation. Sometimes you'll hear it referred to by its number, which is 275. And essentially, what this does is it moves away from a suitability standard of care and it moves it to a higher standard of care, this best interest standard of care that we're all hearing about. In a nutshell, we're talking about anytime an annuity recommendation is going to be made, it has to be made in the best interest of the consumer, and it has to put the interest of the consumer ahead of the interest of the producer and the insurance carrier. So that's kind of what they're talking about when they're talking about best interest. This model regulation, though, it does list 4 obligations that have to be met if a producer is going to be acting in the best interest of a consumer. Those 4 obligations are care, disclosure, conflict of interest, and documentation. So under the care obligation, basically a producer needs to gather consumer profile information, which is similar to the suitability information that producers are going to be used to gathering anyway when an annuity sale is taking place. But the NAIC, they did add a couple of additional items in there, and they talk about how that's really the minimum amount of information that should be gathered to help the producer understand the consumer's financial situation, insurance needs, and financial objectives. Now, once that consumer profile information is gathered and the producer has an idea of the consumer situation and their objectives, then they need to determine if an annuity is going to be in the best interest of the consumer. Now, assuming that an annuity would be in the best interest of the consumer, then the producer needs to analyze the annuities that are available to him or her, and then select the annuity or annuities that address the financial situation, insurance needs, and financial objectives of the consumer and is in their best interest. So that's in a nutshell, that's the care obligation. The disclosure obligation requires that a number of items need to be disclosed to the consumer. Fortunately, though, the NAIC, they did provide a sample form for use. So it kind of gives all of us an idea of how they think a disclosure should be made to the consumer. So we can use that as a template as we're developing the disclosure document to be given to the consumer. The third obligation is conflict of interest, and there any potential material conflict of interest needs to be identified and then either avoided, or it needs to be reasonably managed and disclosed to the consumer so that there's transparency for the consumer. They know if there are any conflicts on the part of the producer. And then finally, the fourth obligation of documentation. And that's the one that's really important in my view, because the producer needs to document not only the recommendation that they're making to the consumer, but they also need to document the analysis that's done by the producer to come up with that recommendation, which is going to be something new for a lot of insurance agents. Documentation here, it's really important not only to comply with the requirements of this best interest regulation, but also to protect the producer. I mean, whenever we're talking about documentation, I always think of that's the evidence that you're creating to help protect yourself. One of the things that I think all of us need to keep in mind is that producers have received a lot of training over the years. They're trained on sales and marketing and products and all kinds of things. But most insurance-only producers especially haven't received much formal training in compliance, which would include how to document things. And so it's going to be very important for producers to think about their documentation process, develop a process if they don't have one. But one of the things that we always talk about is process is good if the process is good. And what we mean by that is having a process is a good thing. It helps you develop a repeatable way of doing things. It's a consistent way of doing things so you don't forget things. But that only helps you if the process that you're using is in fact good. If the process you develop and you use over and over and over again has missed certain items, or perhaps you're doing something perhaps that you shouldn't be doing and you've included that in the process, then that's really not helping you, right? So process is good if the process is good. So that's, in a nutshell, Chuck, that's the requirements under the best interest model reg.
Thanks, Roger. And I know this is all new to the industry, but we had another producer asked about best practices. And again, we can't know in particular right now, but what do you think will be important for producers as a best practice as they do try to comply?
I think Roger hit it, right, the nail on the head there, is that the first thing is just training on, what is the rule? What does it mean? What does it really mean to you? You can't really start to manage it until you understand how it applies to you. But like you said, documentation is going to be huge. Making sure that you have processes to demonstrate that you met the best interest standard. For example, I know we worked with NAFA. We were able to be a contributor to a best interest toolkit that you guys put out. That's a fantastic resource on some specifics on how to manage the best interest. I definitely would recommend folks take a look at that. I believe it's available on the NAFA website now, but that's one good tool. And you want to look at your process of doing your analysis and your recommendations. It's not going to be necessarily okay to say, you know what, I've got these two products that I like and I recommend almost every time because I know them really well, and just document that fact. You really do have to look at all the options that are available to you and document why you chose the one that you did, and not just that you went to your go-to product because, it's obviously you can't, keep in mind or memorize the specifics of 30 different products, but you do need to consider them when you're making a recommendation. So in addition to disclosure, documentation, and make sure your process itself, does take into consideration your client's needs and all the things that you're available or that are available to you to offer. Now, if you're a producer with, you're also registered as an investment advisor, you may have to manage different standards. So, say for example, if you have clients that are RIA clients but not annuity clients or vice versa, you'll want to make sure which states have adopted the model reg and which states you're considered a fiduciary, which states you're not, and how are you going to manage that if you have different standards? Can you find a lowest common denominator and apply that to everybody? I mean, it's going to be a personal decision to make. Obviously, you're going to want to pay attention to the carriers you recommend. I'm guessing they're all going to have their own set of policies and procedures on how to manage this best interest, and they could differ, significantly. So, especially in the short term when the industry is trying to work out, what are best practices. So you want to, keep yourself informed on what the carriers are telling you. Obviously, you need to, as Roger mentioned, identify and avoid or mitigate any conflicts of interest. And probably just as important is look at the advertising you use, the sales tools that you're using, the sales practices that you use, and they may need to be modified to account for the model regulations. So you want to have, ideally, somebody who is an expert in compliance to help you wade through, what does your business look like now and what should it look like, post model reg. So, and a little shameless plug here, that's definitely one of the primary services we offer is to help you understand these regs and manage them. We do have what's called our compliance standards program. It's a membership program that there's a really heavy focus on best interest in it. It's going to become more so in 2021 than it was in 2020. And the goal of the program is to help see you through all the steps of managing to the NAFA model reg. So I would say definitely check out our website and look for the compliance standards program. Take a look at that. That's going to be one way to get the information, the education you need, and the tools to really help manage what's going to be expected of you going forward. So.
Thanks, Maureen. I appreciate it. Go ahead, Roger.
I'm sorry. One thing I would add to that is there are going to be some changes made at the insurance carrier level as well. So there are, within the model reg, there's a requirement for insurance carriers to assess whether producers have been providing the disclosure to the consumers that they're supposed to under the model reg. And so I think what that's going to mean is that some carriers might decide to produce their own disclosure form and require producers to submit that along with the product application. Some carriers might choose not to do that. They might choose to take more of a testing or a sampling approach to things. And if that's the case, then they might sample some cases, they might sample some producers, and they are going to ask for those producers to send in that disclosure form later on. There are other ways for them to do it as well, though. Then they could use consumer surveys to ask whether the consumer received that disclosure form. They could send confirmation letters to consumers. They could ask the producer to sign some kind of attestation. So just be aware that there are going to be some changes at the insurance carrier level as well, and it could impact either the forms that need to be submitted to the carrier, or there could be some direct contact with consumers.
Roger, that's a great segue to the next question that I got. And the question was, as an independent agent, what specific new documents or communications will I need to fulfill the new NAIC annuity best interest standard?
Yeah, I mean, Roger touched on it before, but that disclosure form is going to be required under the model reg. And as we mentioned, that there is a sample or a template that the model reg provided as a way to get an idea of what they're looking for. And as Roger mentioned, there may be specific forms that carriers may want you to complete. Some things that are going to be required on that form are going to be things you have to disclose to consumers, such as the types of products that you sell, fixed annuities, life insurance, variable annuities, mutual funds, kind of the range of products that you sell, the number of carriers or entities for whom you sell them. the type of compensation you might be receiving, such as commission, fees, non-cash compensation. And the form needs to notify the consumer that they have a right to ask for more information about their compensation. You also need to document, if the client refuses to provide their customer profile information or enters into an annuity transaction that's not based on your recommendation, you'll want to have them sign a form for that as well. But those are really it for documentation, specific to the model. Though there could be additional collateral that are going to come out as best practices that the industry may adopt, certain forms they may want to see. But according to the model reg, the disclosure form is really the key document that they honed in on.
Thanks, Maureen. And you both mentioned this too, that we have, should insurance-only producers that are just insurance-only licensed currently get a Series 65? In other words, should they become registered as an investment advisor?
That is a great question. And this question came around actually before the 2017 version of the DOL rule as well. There was sort of a rush to get 65. It can offer some benefits. I mean, you expand your product offerings, your service offerings. You can be more of a holistic planner and a one-stop shop. You can offer investment advice with a 65. You can charge fees. Definitely a benefit to it. Would caution you though that getting a 65 is not kind of a free pass to do whatever you want. We have heard people say, oh, get your 65 and then you don't have to worry about all the regulations. You pretty much can do whatever you want. And I would say that is absolutely frighteningly wrong. When you get your 65, you are now taking the SEC or state securities regulators and adding that on top of the state insurance regulators you're already subject to. So now you have an added layer of compliance, an added layer of responsibilities. So it's really something that you need to consider carefully and make sure you weigh the benefits with the the added work. We've seen some firms where you've got a small firm, say, and the owner of the firm is the investment advisor, and he's his own chief compliance officer, he or she. And in reality, that individual would never get a CCO job. They don't, they just don't have the experience. That's not their specialty. And that's where it gets a little bit tricky, because the person who's acting as the CCO, needs to understand all the rules, needs to understand how to manage REA compliance, and it's tough to do. It's tough to wear two hats. They tend to be sometimes at odds with each other. You have to think about, you're going to form your own REA and potentially have to be your own compliance officer, or are you going to join an existing REA that has that already set up in place? I would say either or could be a great solution. I'm not advocating for one over the other. I would say that if you are thinking of starting your own, definitely get some help with the compliance part. Go to work with someone who understands the SEC or the various state requirements and can help you get your program in place. I'm going to also mention that that's one of the key services we offer is we help firms, especially the mid to small firms, get set up, get registered. We'll look at all of the requirements, the compliance requirements, and set you up with a compliance platform and a system that applies to you, so that you're not just getting this toolkit with 40 forms and you have to figure out which ones apply to you and which things you have to do or not do. So I'd say that's one of the really valuable services we offer, is that we can help you get set up, manage your risk on an ongoing basis, and then complement that with the insurance side. So if you are, we have multiple registrations and licenses, you want to make sure your compliance programs are integrated, that you don't have two separate programs that don't speak to each other and maybe even contradict each other. So our goal is really to make it seamless and make it easy and practical. Again, my shameless plug there.
I love it. Everybody's in our business is in sales and kind of working through that process. So there's no shameless plugs here. We really appreciate that.
We're wondering why you keep selling more, right?
How does an agent show that the purchase of a fixed index annuity using funds from an investment product is the client's decision and not the agent's advice?
Yeah, so first, I think it's really important to understand what does constitute investment advice and what doesn't. And fortunately, there are a couple of states that in the past have issued some guidance on this topic. They laid it out really well, talking about these are the kinds of activities that are permitted by an insurance-only licensed producer, and these are the kinds of activities that are not allowed by an insurance-only licensed producer. So the first step there, I think, is to understand what does constitute investment advice and what doesn't. We found quite a few producers who have chosen to use a form for this purpose. They have a consumer sign a form that basically says that I, the consumer, decided to sell XYZ product, and my insurance agent didn't give me any advice or didn't give me any recommendations to sell this product. And I think the use of those kinds of forms is fine. I don't have any issue with that. I think it can help create some additional documentation to support the fact that the consumer is acknowledging that the insurance-only licensed producer didn't provide any investment advice. The one thing to keep in mind if you're going to use this kind of form is that you'll want to use it consistently. And what I mean by that is anytime you've got a client that is choosing to sell a securities product in order to come up with the money for the premium to purchase a fixed annuity, you'll want to make sure that you're using that form. Now, conversely, anytime that a consumer is not selling a securities product, you don't want to use that form. We've had a couple of situations with a couple of our clients where they just used this form with every one of their clients, whether it applied or not. So perhaps they had a client that was going to had a CD that was coming due, or they're taking funds from a bank savings account, or maybe it was a replacement of another fixed annuity, but they still put that form in front of the client when really it wasn't applicable. So that's what I mean by if you're going to use the form, make sure that the content of the form is good, obviously, but then use it consistently and only use it when it's applicable. And the other thing that we always tell our clients, though, is beyond that, whether you use a form or not, it's critically important that you add some client notes regarding how the client chose the investment that they're going to sell and why they chose to sell it, and the fact that they made that decision on their own and you disclosed to them that you weren't appropriately licensed to provide that investment advice to them. Because that's, if you include that in the client file notes along with who you met and when you met with them and what you discussed and what their needs were and what product was recommended, if it's just added into your client notes as additional documentation, that's also going to help create that evidence to protect yourself in case something happens later on and the client comes back and says, well, no, my agent told me to sell that mutual fund or told me to sell that stock. You'll have additional documentation to help support the fact that, no, I didn't. Client made that decision. Here's how they did it. Here's why they did it.
That makes a lot of sense. We also received a similar question about how IMOs would be affected. Can you provide some insight into that for the audience in terms of how they're going to work with the NAC rules?
Sure. So I think it's going to affect IMOs in a number of ways. Like with so many other things, I think producers are going to turn to their IMOs for some guidance and some training. Anytime they need something like that, whether it's a new carrier product or a new procedure or a new regulation, I think a lot of producers, they naturally turn to their IMO for guidance on that. So I think IMOs are going to want to prepare themselves for that kind of interaction with their producers. They'll want to get some training themselves on what's required and some of the best practices to comply with this best interest model reg so that they can provide that to their producers. They're also going to want to consider, obviously, any new insurance carrier procedures that are going to come about because of the model reg so that they can help producers work through those new procedures and processes with the insurance carrier. When IMOs have wholesalers who are working with producers to help either train them on new products or perhaps help them with case design, help them determine which product or products might be best to recommend to a consumer, it's going to be important to train those wholesalers on these new best interest standards, because in the past, there was only that, I'll say only that suitability hurdle to get over when they're working with the producers and helping them identify which product or products to recommend. And now that standard is going higher, right? Now they've got that best interest standard of care that the producer is going to have to meet. So they'll want to examine what kind of training those wholesalers may need to help them be able to transition to this new best interest world. And the same goes with IMOs that have back offices. They have an operations area. Perhaps they help, quote unquote, scrub product applications before they get sent off to an insurance carrier. Obviously, those insurance carrier procedures are going to change, and so those folks in the back office, those operations folks, are going to need some additional training. Advertising, sales tool, sales practices. Maureen mentioned this earlier. I think it's going to be very important for IMOs to have to examine all those kinds of things that they're currently providing to producers to make sure that it's going to meet those best interest requirements, and it isn't going to create problems for the producers that they're giving those tools to. It wouldn't obviously reflect very well on an IMO if they're creating some advertising, seminars, what have you, and they're sending it out to their producers to use. If that's going to create problems for the producers, then obviously that's not going to bode well for the IMO. And then there's also the cash and non-cash compensation. So many IMOs, they'll create incentive programs for producers to sell more. If any of those incentive programs are based on sales of specific annuities within a limited period of time, then those are prohibited under the model regulation. So IMOs will need to examine any incentive programs they have to make sure that they're still going to be allowable under this new regulation. And all of these things that I just mentioned for IMOs, these are things that we do here at Summit Compliance. Right? We do webinars, we speak at producer events, we train IMO employees, we're on call for Q&A when it comes to any kind of regulations. We conduct risk assessments for IMOs. So all of these things, we can help the IMOs work through this transition and help them be in a better position to help their producers in the future.
Thanks, Roger. I appreciate that. Let's shift gears a little bit here and talk a little bit about the DOL. It's interesting that, in light of the change in administration, and we haven't really heard anything about finalization of the DOL proposal, so it should be interesting. What sort of impact would this have on producers and IMOs?
Yeah, so this one potentially could be a biggie. As you mentioned, it was created. The current proposal was created under the Trump administration. So currently this administration is obviously in favor of it. Several high-ranking officials who are working with the President-elect Biden, including Kamala Harris, are on record as opposing the current reg, though. They don't believe that it sufficiently protects consumers. They think it should be, more robust and place even more, greater obligations in financial institutions and producers. So it'll be interesting to see what happens here. But essentially the rule that's been proposed has a 5-part test. And the DOL provides some guidance on this 5-part test that determines when somebody who provides investment advice is considered a fiduciary. All of the 5-part test prongs have to be met for the investment advice provider to be a fiduciary. And it appears so far to indicate that most situations involving an investment professional, including an insurance agent, giving advice regarding plans and IRAs, for example, in a rollover recommendation for compensation would meet that 5-part test. And in these instances, they would be considered a fiduciary. Under the proposal, there are multiple types of compensation that be available. Financial institutions and investment professionals could receive a wide variety of payments, including commissions, that might otherwise violate those prohibited transaction rules. For a producer, here's a few things that would apply. First, the impartial conduct standards. The exemption requires that compliance with these 3 impartial conduct standards have to take place, and they are the best interest standard, reasonable compensation, and a requirement to make sure you're not making any misleading statements. Next, there would be disclosures to retirement investors. So written disclosure we provided to the consumer that the financial institution and the professional are fiduciaries under ERISA, under the code. And then there'd be an oversight component. So the financial institution would be required to adopt some policies and procedures that were designed to reasonably ensure compliance with the impartial conduct standards and conduct a kind of a retrospective review of compliance. Now, this proposal is interesting because it would allow insurance carriers to supervise agents, or they could also create an oversight and compliance program through other intermediaries, such as the IMO, the FMO, a BGA, which is unusual because that was not included in the earlier version of the model. It did not make it that easy for an intermediary to help supervise. Now, the DOL has requested comments on these suggestions, and we're at this point still waiting to see, what's going to happen with that rule. It's sort of in flux right now. Obviously with the election, having just happened, There's likely to be some modifications to the original proposal, probably based on the comments that the DOL is receiving, and it's really unknown as of this date how those changes might impact the proposal. Like I mentioned, the incoming administration is not a big fan of it currently, so we could see we could actually see the current proposal getting squashed, and a new one, maybe more consumer friendly, could come out in the coming year or two. There is, the possibility that if the proposal becomes effective, the industry may choose to pursue litigation around it, kind of as they did during the fiduciary rule of 2016 or 2017 as well. So it'll be interesting to see what happens, but it definitely, if a version of it goes through, it would affect a significant portion of the insurance producer population, because so many annuities are funded with rollovers from retirement and qualified money. So more to come for sure.
Oh, most definitely. It's kind of interesting how that is interesting. So, again, I mean, obviously we just had the election. Do you have any thoughts, how the outcome you think will affect the regulatory perspective? Any other thoughts on that?
If I had to guess, I mean, like I said, I'm not a medium. I can't predict anything, but given the noise we've heard from the Democratic administration about this and the complaints they had about it, I would be surprised if what's currently proposed actually goes through. I would be very surprised to see it go through as is. So I would anticipate there's going to be some changes to it, or like I said, have it squashed and a whole new one proposed that could be more restrictive. And again, it probably definitely face some litigation from the industry. So this could drag on. It could drag on for a year. So I would be surprised if we have anything finalized in 2021. You never know. But I think that it just takes time for all these processes to work themselves out before we get to anything. How's that for not a real definite answer, but my guess, like I said, it's going to take a while to get through all the steps.
No, that makes really good sense, because we don't even know who the proposed Secretary of Labor will be and how that all plays out. So it is interesting.
Right.
As you know, obviously this year, a lot of our advisors have kind of gone on to do different things to try to get into touch with clients. And one of the things we kind of we're looking at is they're using obviously the tools at hand to try to do things virtually. Can we safely blog about financial strategies if we don't mention specific products?
Yeah, great question. You're right. So much is digital these days. I mean, there was all these social media and blogging and websites and digital advertising have always been around, but with the COVID this past year or so, it's really become the primary means of getting in front of consumers. So I would say that, obviously advertising is advertising. It's written documentation that you need to be, aware that there are rules applied to it. But when you do it online, you've kind of opened up, or you have opened up to greater exposure, because now anybody can see it. It's not just a matter of somebody, getting a brochure that you hand out or getting a mailer in their mailbox. It's online. It's easy to find. So, but generally, to answer the question, blogging about financial concepts is generally fine, and it definitely poses less risk than getting too specific or detailed. Obviously, the more detailed you get in your discussion, the greater likelihood you need to balance that with, product or strategy, terms, conditions, costs, and such. I would say you want to be careful that what you're blogging about is in line with the services you offer. So, say for example, you're a fixed insurance agent, you don't offer securities. You probably want to be careful about blogging in detail about securities products, or especially, I would suggest not disparaging large categories of products that you don't offer, because you want to make sure that you're seen as objective and truly looking at the client's best interest, and not just promoting only things that you're able to offer. Like I said, with any digital media, at least a footprint, it tends to be documentation that can either help you or can hurt you in the event of a complaint or a regulatory action. I would say there's a few tips you could manage by to try and reduce your risk, and that is, obviously, again, keep it high level. You want to make sure you're not giving, advice or blanket recommendations. Even if somebody's interacting with you on the platform, if they want to get specific and they want advice, you want to make sure you take that offline. You never want to have someone, posting their personal information on your site. And I would say, like I mentioned, be careful about a one-size-fits-all solution. Obviously you believe in the products that you offer and the value they bring, but we need to be careful that it doesn't look as though we're coming across as assuming that it's the right fit for everybody. And I know that sounds common sense, but it's easy to get lost in advertising when you really believe that your product is right. To clarify that, it's not right for everybody, but here's when it makes sense. Here's the audience. Here's when it can really help you, and be able to recognize when it maybe isn't the right fit for somebody. I would say balance the discussion. I know balance is a really vague term, but in practice it means things like, for example, when you're talking about, tax-free loans from life insurance, balance that with talking about, by the way, as a policy owner, you need to manage your cash value. You want to make sure you don't overloan the policy. If you do take too many loans or excessive loans, you could lapse that policy. You could create a taxable event. So really balancing, if you do this, here's the great benefit, but here's what can also happen. Another area that comes up is we're looking at optional riders. There's a lot of big push for income riders, especially healthcare riders today. They can offer so many things to consumers. We want to make sure that we're talking about the terms and conditions. So, for example, what does it cost each year? Is it built into the product, or is there an added fee? What does the client need to do specifically to realize the value of that rider? How could they forfeit it? And we want to make sure we're not relying on small print in a brochure to get this information across. It really needs to be integral to the conversation. Not to say that you can't get creative with it. I mean, there's no one solution for getting information across in a balanced way. We can look at your messaging, your specific means of communicating, and tailor the best approach to get your message across. You want to make sure that you're promoting your product because you believe in it. It's a good fit for a lot of consumers. We don't want to have one of those ads where you've got 3 pages of disclosure like you see for those prescription drugs in magazines and such. But so it's not difficult to get the information across. And then say a last plug here for disclosure. So, we want to make sure we're not hiding it, we're not minimizing it, we're not making a client search hard for it, or that we're relying on other pieces of advertising to get the information across. So really each piece of advertising, including online advertising, needs to stand on its own. You do have some flexibility online that you could perhaps, link to a web page for more disclosure. I mean, that's one luxury that we don't have in print advertising is you can link pieces together electronically. So there are ways to do it and do it creatively so that you're not ruining your message too. So, and our process here at our process here at Summit is to really work with you to make sure that your approach matches your business, that we can get creative and, like you said, but there's not a one-size-fits-all approach for compliance. So we have fun with it and we have fun with our clients.
That's great, Maureen. I think, I guess to add on to that, and you mentioned, obviously the different things with the online situation, it brings the other key thing about online, and that's social media. What are the key risks to using social media and digital marketing to that extent for a business? And can you give us some do's and don'ts?
Yeah. So, some of those things I just talked about also obviously apply to social media, but I think we want to focus on, again, not going too far down in the weeds, because then you're going to find it harder to manage those advertising requirements. But, keep in mind that with social media, you tend to have limited space. So the goal here really should be to promote your brand, build your credibility, get people to want to learn more, not necessarily explain the ins and outs or the nitty gritty of every product or strategy in detail. But additional components that you need to consider are privacy and consumer data information. So say, for example, if you're collecting consumer data, you need to know the privacy laws and the data security laws in the states where you're operating. If you're collecting personal information, how are you storing it and where are you storing it? Are you sharing it with anybody? If someone is posting on, say you've got a Facebook or a LinkedIn page and you've got consumers posting there, do you have a means to identify and remove any content if it gets inappropriate? If somebody either gets, for whatever reason inappropriate, or they say they post their own personal information saying, hey, I have policy number such and such, can you help me, help me with this? You want to make sure that you have a method to take that offline and delete the post if it's problematic. You want to make sure that you understand what the requirements are of the carriers you represent or your broker-dealer, your investment advisor. This might include, whether or not they actually want to review it, if they want to supervise it. They may have specific disclosures and items that you'll want to be aware of as well. So just knowing that social media is so fluid, and especially with the back and forth, the conversations you can get into, it can be easy to go down a rabbit hole. So I would say to, have a thoughtful process in place when you go on social media. kind of determine up front, this is what I'm going to use it for. Here's how I'm going to use it. Here's how I'm going to tackle things that come up that are not within my game plan, so that you have that. So if something does crop up on a page, or there's a comment or a conversation going on, that you have concerns with, that you've already got something in place, you can address it right there without trying to, panic in the moment, so to speak. And I would say, as with all advertising, get it reviewed. It's so easy to have it reviewed for compliance. It's not ungodly expensive, and it can really go a long way to protecting your business. It can keep you off the regulatory radar, keep you off the radar of your competitors. Believe it or not, a significant number of complaints from advertising come from your competitors. They can find it out there, and if they think there's a problem with it, or they're just unhappy because you're potentially taking their business, they are commonly the source of complaints at the state level. So I would say do what you can to get it reviewed. Make sure the person too that does the ad review for you is really an expert on the subject. For example, we've seen shops where there's a marketing person who now is assigned the role of compliance as well, and they're likely not going to really be able to protect you as much as you deserve to be protected. We want to consider that, for example, a person too who may handle investment advisory compliance, maybe they don't understand these nuances of state insurance regs. Because after all, like we said, if you have multiple licenses and registrations, there's no single one regulator that trumps all the others. You have to abide by all of them. So definitely find an expert. And again, at Summit here, we are experts in insurance, securities, and investment advisory compliance. So when you work with us, you can be assured that all avenues are covered, no matter what licenses or registrations you hold. Again, it's surprisingly affordable and easy. And through this process, we help our clients understand what the advertising rules are, what they really mean. They tend to be written pretty vaguely, and we can work with you to help you identify when you've hit on specific issues or words or things that maybe aren't in the regs, but you'll find them in enforcement actions over and over again, because that's really how we get a good sense for what the states are looking for, is what are they enforcing. So we'll help you though with that process to identify what your potential risks are, and then we'll offer solutions. We'll offer you word changes, copy changes to help meet the rules, and make sure your advertising is as effective as it can be. And one thing I'll just note here again is that one service we have recently begun offering. We've been doing this privately for consumers, but it's something that we are looking at offering quite a bit more. Is that we have a branch of our firm that offers blogs and article content. So we develop content on a variety of topics, and when you get it from us, it comes compliance approved. So basically you're getting really good, valuable marketing content with a compliance approval all attached into one package. So that if you're interested in content, we have a whole series, library of content, from blog articles to website pages to even brochures. If you're looking for content from people who know the industry, and it comes already pre-approved, so to speak, it's been reviewed for the insurance and in securities model regs, I would definitely say give us a call, and we'll help you out with that.
Thanks, Maureen. Really appreciate that. We really appreciate you taking the time today, you and Roger. Any last thoughts and ways you can help our members understand what they need to do and how to protect their business and their clients?
Yeah, so as Maureen pointed out, we really try to make compliance easy and practical. I know that there's a sentiment out there in the industry that, oh no, it's compliance and it's going to be a hassle and we're going to have to make a lot of changes. We really do everything we can to make it as easy and practical for our clients as possible. We don't throw a lot of legalese at you. We just make you try to figure things out for yourself. Right? We work with you. We try to understand which risks are most important for you, and we provide those solutions that are going to work for you. Because ultimately, that's our goal, and our mission is to protect our clients. We've talked about a lot of topics here today. I think a couple of things really stand out in my mind. One, obviously, is to have your advertising reviewed. It's a huge risk for IMOs and for producers, and it's so simple to have somebody review it, like we can do here at Summit. And the other thing is, having a compliance resource really isn't optional anymore. There are so many new regulations coming about and so many major changes happening in our industry. You'll need that compliance resource to provide some training, to answer your questions. We've got a compliance standards program that we mentioned before that really is going to focus heavily on best interest requirements in 2021. And so I think those two things are going to be critically important for annuity distribution in 2021. And I'll leave you with this final thought too. I mean, we as people, we take steps to protect what's important to us, right? We buy life insurance to protect our families. We teach our kids not to touch a hot stove. We buy alarm systems to protect our homes. So shouldn't we be doing the same thing to protect our business? Shouldn't you be doing the same thing to protect your business, protect your source of income? And by doing that, I think you'll be surprised how affordable compliance can be. I think you'll be surprised maybe by how much better you feel knowing that you have taken some steps to protect yourself and make sure that you're not going to fall victim to perhaps a huge fine or reputational damage or even losing your license in the future. So those are the kinds of things that we do here at Summit Compliance. And Chuck, we really appreciate the time today.
Well, thanks, Maureen and Roger. And one of the things that I'd say too is that, you guys can help firms have a competitive advantage, because I think when you're in front of it, it just makes the way you operate so much better. And again, taking those love to hear best practices, and it's better for everyone. So I want to thank Maureen and Roger again for their membership and their partnership with NAFA. If you're not a member and would like to take advantage of this relationship along with NAFA benefits, please go to NAFA.com and join today. Thank you again, Maureen and Roger, and thank you all for your time today.
Thank you, Chuck.